In this video, I'll be showing you how to earn income on your cryptocurrency assets, even in times like this, when assets are trending down. You can see Solana and Bitcoin throughout the past 3 months are going down. But look, since I entered this position on March 13th, I am up $33 as if I were just holding on it into the market. I'm doing about 41% APR, and that's on 1.6, 1.7K in liquidity. And disclaimer, this isn't financial advice. Always remember to do your own research. I'm just giving you my opinion. And anyways, to actually earn income on our cryptocurrency assets, despite market conditions, we'll be taking advantage of the liquidity as a service business model. I can explain this to you very quickly. So, say a trader is on a decentralized exchange where they're going to swap one asset for another. Say a trader has Ethereum and they want to swap it for Arbitrum. So they go to make the swap. You can see they'd hit get started. They'd go down. Oh, look, they're having to pay a fee. In this case, it would be a $9 fee. But if they're swapping much more money, let's just say 6 Ethereum, the fee goes up. Now it's a $24 fee. But what's really cool is that a percentage of this fee actually goes out to the liquidity providers who are providing liquidity to the exchange and actually enabling it to happen in the first place. If you're excited for me to show you how you can earn income on your Solana, make sure to subscribe and hit the bell so you don't miss an upload. So just to show proof of concept, I have 1.6K in capital, $35 in pending yield, and look, I can go ahead and claim that. So I can go ahead and harvest this yield and put this 34 bucks right into my crypto wallet. You can see I hit harvest, confirm, and now boom, just went up 35 bucks. Sweet. Now I have some Solana and I also have some USDC. And now I'll wait for more yield to pile up before I collect it. To actually find these opportunities, we'll be using the tool Metrics Finance. It's the best software for finding DeFi positions, also simulating your returns to see what type of money you could be making on your crypto assets, and then building out your portfolio. I'm gonna go ahead and launch the app. And by the way, I'll leave a link in the description where you can claim a trial to the pro version of the software. So you can definitely take advantage of that. So anyways, we'll go to the Discover tab at the top. And remember, in this video, I'm showing you how to make income on your Solana. So let's show the Solana positions. For select exchange, let's go ahead and select Orca, Radium, then I'll unselect Uniswap to get rid of all those pools. And now we just have Orca, Radium, and then for network, Solana. So we have about 782 pools to go through over on the Solana network, but a majority of these pools I'm not going to want to look at. A lot of them might have very low TVL, very low fees per day, very low APR, or other reasons. So let's put up some filter parameters. Obviously, we want to filter out these pools that have very low APR. Metrics Finance makes this very easy. So let's go look for pools with higher than 15% APR, for example. And remember, whatever APR is showing here on metrics off the bats is not always your end APR. As you broaden your range at the points you're providing liquidity for, your APR can raise. So then we can go to TVL. Let's look for pools with higher than $3 million in TVL, for example. Now we're down to 14 pools. This makes it much easier to look at solid pools that we'd want to get into. So we can start scrolling through opportunities, see what we see. I'm probably not going to take a look at the fart coin to Sol positions or the USDC to me type positions just because I'm not interested in taking on exposure to meme coin positions. So now I see this EURC to USDC position. It's showing high APR, 90% APR, solid TVL, but the average daily fees are lower. That's a bit of a red flag to me. So we can dive deeper into this position and see what's going on here. So we can hit the simulate button, open it up, we can scroll down, and right off the bat, we'll see the volume history and fee history. Oh, here we go. So it was having about $300 a day in fees, but look, February 15th, boom, there's very, very low volume and almost no fees. So this is a big red flag. And I'm so glad I have this data here to show me not to invest into this position. So I'm going to go ahead and close this position out. So this is another reason why you need the right tools and not just be looking at the APR and TVL, because sometimes the volume and fee history might be very low. We can look at this USDS to Sol position. We can go over here, hit simulate in a new tab. First, let's type in a sample deposit amount. We can go with about 9,000 bucks for a simulation. And then we can go ahead and select our price point range. I'm going to keep it pretty broad for the sake of this video. And scrolling down, we can see how correlated the assets are. They're very low correlation. I assume USDS is a stable coin, but I'm not sure what USDS is. So what I would do here is copy the asset, go to CoinGecko. We can paste it in here and we can start reading about it. Yep, looks like it's a stable coin. It's about 99 cents. And then from here, we can start reading about the asset. We can go to the website of the asset, do our due diligence, etc. And our goal here is to see if we're bullish in the asset and we think it has a role in the DeFi ecosystem in the upcoming future. And if the answer is yes, if you're interested in taking on exposure to it, you can go ahead and do that and dive into the pool more. You can see the volume history isn't too bad, nothing like the last pool. Some days do get pretty low, so you would have to watch out for it, but there is solid volume per day. A lot of these days have millions and millions of dollars in volume. And then remember, you can go to the calculation range, zoom out, see how the pool has performed over the past 100 days or so. You can see, I guess it's pretty new because there wasn't any volume and fees until January 20. So remember, all this information is for you to make a data-driven decision, an informed decision before you get into these liquidity pools. So we can go back, try to find a more solid opportunity. We have USDC to Solana at the top, showing about 79% APR, 32 million bucks in TVL, and a whole lot of average daily fees. We can hit simulate, check this out in a new tab. And by the way, if you've learned anything so far, subscribe and hit the bell. I really want to get to 1,000 subscribers. Thank you. So we can go to deposit amount, set it to 9,000 bucks again, and we're getting pretty weird numbers for the min price and max price. You can see it's 0.005. So we'll hit swap the order of these assets right here. There we go. Now we're getting more easy to read numbers. Now, if you take a look at my Orca position I have open, I have a very broad range. I'm at 113 to 194. This has been open for a while. So if I were to rebalance, or if I were to re-enter this position again, I would do it differently. I would have my max price much higher than 190. I would probably have it at something like 161. But my min price is fine at about 112. So if we're looking at about 112 to 161 range, we're looking at about 108% APR on this position. And for the volume history, throughout the past 30 days or so, it has trended down a bit lower volume, but still, it's a ton of fees and volume per day. Look at this, 40K in fees on this lower day. And if we go ahead and zoom out, we can look at the past 60 days of data, for example. Scrolling down, and yeah, so the volume and fees from the past couple weeks or so doesn't look like a huge difference throughout the past 50 days or the past 40 days. So from here, again, I do my research on both Solana and USDC, see if they're assets that I want to take on exposure to. For me, it's yes, since I'm already in this pool over on Orca I showed. And then I would go ahead and hit save to my portfolio, go to the build section and deploy my assets. And once you're deployed into the position, the track feature is pretty awesome because you can get a bird's eye view of your position, see your APR, your estimated fees in the next 24 hours, 7 days, and 30 days. Then you can also hit details and dive deeper into your position. So then you can scroll down and see your divergence loss, your versus hodl, etc. What's really cool is you can see that if I were holding onto my assets in 100% Solana, I wouldn't be making as much as if I were to deploy it into these pools. Same thing for USDC. If I had these assets all in USDC, I wouldn't be making as much money as I am right now in these pools. Same thing goes for 50-50 as well. So you can see my position is off to a great start. I can always go ahead and scale this up and deploy more capital. I plan on doing that very soon. And let me know if you want to see a video of me deploying more capital into this pool or what type of video you actually want me to see. Someone commented they wanted me to make a beginner tutorial, and guess what? I went ahead and made that beginner tutorial, so you can check that out on my channel. Anyways, make sure to click the link in the description to claim a trial to the pro version of Metrics Finance so you can try this out all for yourself and experiment. But anyways, I'll see you in the next one.